Good morning, folks. This is Naimaz. I'm Chief Market Analyst at Evertrade, and welcome to our daily analysis on our YouTube channel. Now, as always, folks, if you haven't subscribed to our channel, I highly recommend you to do so. And a bit of a housekeeping: anything which we'll be discussing in this video cannot be perceived as an advice. Now, as always, we're going to bring out the MT4 platform, and we will begin our conversation by looking at the daily time frame. And the question which we're going to try to answer today is, will gold prices continue to move higher? Or in other words, what is stopping the gold price from moving higher? So number one, if you've seen our previous videos, we talked about the price coming into this area of support and moving higher from here, which it did. And then when the price arrived back into this area of support, which we defined it before, we did discuss the possibility of the price forming a double bottom. A double bottom is a reversal pattern which indicates that the price is likely to move to the upside. And that is what really happened over here as well. And when the price started to move higher, the price also sort of broke its downward trend line. So if we join the lows right over here like this, the price broke above this downward trend line. So that was the confirmation for us that, look, this particular momentum is picking up more strength and price is likely to move higher. Now, the next big signal in terms of a price came when the price broke above the 50-day simple moving average. Of course, that battle wasn't that easy. We did see a bit of a few days of consolidation and then move to the upside and to the downside for the next few days. But then eventually the price did break the 50-day simple moving average to the upside with enormous amount of strength, as you can see over here. Now, once that happened, we knew that now the next major sort of a resistance is going to be 100-day simple moving average, which is right over here in yellow. Followed by that is your 200-day simple moving average. Now, of course, the price is hesitating. The day before yesterday, the price did come close to its 100-day simple moving average, but it didn't break above that 100-day simple moving average. Of course, our resistance levels are still at 1801 to 180, let's say 1818. So that is the level of resistance, just the top of these particular candles. So that is our resistance. So in essence, we have two resistance level on top of each other. What do we mean by that? We have a resistance level which is imposed by the 100-day simple moving average, and then we have other resistance which is running between 1801 to 1821. Of course, after that, the next resistance is going to be our 200-day simple moving average. Now, if we look at the price action and compare it with the RSI, how the price is forming low, another higher low, and possibly another higher low, we are seeing the same sort of a message with respect to the RSI as well. Now, what is the importance of this one? The importance of this one is that the price and the RSI are moving in the same direction. That's telling us that this momentum is still, upward momentum is still very much intact, and the prices are likely to move to the upside. Now, of course, the sign of that is going to come from our smaller term time frame, meaning the 4-hour time frame. But what do we mean by that? We want the price to stay above the 50, 100, and 200 simple moving average. As long as the price continues to stay above these moving averages, we are likely to break above the 100 day simple moving average. And now, of course, if the price stay above these moving averages, the signal for that is going to come from the 30-minute time frame, and by that we really want the price to respect its 200-day simple moving average. And not only that, we also want the price to break above the 100 and the 50-day simple moving average. Now, the fact that the price has broken below these two moving average, this particular price aspect is imposing a threat to the overall trend, meaning the price could break below the 50-day simple moving average, which means that the price could actually challenge the 50-day simple moving average on the daily time frame. Now, of course, folks, if this is making sense to you guys, and if you liking the content, feel free to smash that like button, because it helps us on the Google's algorithm, and of course it will give you the notification that we make the moment that we go live. So once again, to summarize, what we have said is that the price is likely to break above the 100-day simple moving average, but in order for that to happen, the price needs to stay above these moving averages. And in order for the price to stay above these moving averages, we want the price to break above the 50 and the 100-day simple moving average on the 30-minute time frame. Overall, the price trend is very much still, it's intact to the and then the path of least resistance is skewed to the upside. That's all for now, and I'll see you guys next time.